Did you know that over 50% of millionaires increased their wealth during the last recession? That's right. While many see a recession as a time of loss, it can actually be a time of great opportunity. With talks of a recession in 2024, are you ready to turn a challenge into your biggest opportunity? In this video, we're not just learning to survive, we're going to thrive. We'll explore 12 powerful, proven strategies that can turn the tide in your favor. From the secrets of investing in undervalued stocks to mastering the art of negotiation, it's all here. So, buckle up and get ready to empower yourself with knowledge and strategies that could redefine your financial future. Let's turn the upcoming recession into your stepping stone to wealth. Chapter 1: Invest in Undervalued Stocks. Welcome to our first step towards getting rich in the 2024 recession. We're talking about undervalued stocks, the hidden gems of the stock market. Did you know that Warren Buffett, one of the richest people on earth, swears by this strategy? It's all about finding companies priced lower than their actual value. Think of it like finding a designer dress at a thrift store price. In The Intelligent Investor, Benjamin Graham, the father of value investing, says, "Price is what you pay, value is what you get." This means we look for stocks where the price doesn't reflect the company's true worth. It's like buying a dollar for 50 cents. But how do we find these stocks? Look for solid companies with strong fundamentals, maybe going through a temporary slump. In 2008, during the financial crisis, those who invested in undervalued stocks saw significant gains later. It's about patience and foresight. As Graham puts it, the stock market is a device for transferring money from the impatient to the patient. This approach isn't about quick wins, it's about playing the long game. And here's a fascinating fact. Studies show that value stocks have outperformed growth stocks in the long run. That means investing in these underpriced stocks could lead to greater returns over time. So, let's start digging for these hidden treasures and set ourselves up for success when the recession hits. Chapter 2: Purchase real estate in a down market. The second step is all about turning a down market into an up opportunity. We're diving into real estate. Rich Dad's Guide to Investing by Robert Kiyosaki teaches us to see opportunity in times of crisis. When the market is low, that's our chance to buy valuable property at a discount. Kiyosaki says, "It's not about the property, it's about the deal." This means looking for properties that offer more value than they cost. During a recession, property prices drop, but their intrinsic value doesn't. It's like buying a car at a discount because the dealership is having a sale. In 2009, after the housing market crash, savvy investors bought properties at low prices. When the market recovered, their investments soared in value. It's all about timing and knowledge. As Kiyosaki advises, the single most powerful asset we all have is our mind. Educating ourselves about the market is key. Did you know that real estate has created more millionaires than any other investment vehicle? That's because property is a tangible asset that can provide both capital gains and rental income. So let's get smart about real estate and make strategic moves to build our wealth, even in a recession. Chapter 3: Buy commodities like gold and silver. Moving on to step 3, we're talking about the timeless value of gold and silver. In Guide to Investing in Gold and Silver, Michael Maloney teaches us about these precious metals as a hedge against economic downturns. When currencies weaken, gold and silver typically hold their value or even increase. Maloney says, "Gold and silver have been money for 5,000 years. These metals have stood the test of time. Unlike paper currency, which can lose value due to inflation. It's like having an insurance policy that never expires." During the 2008 recession, gold prices soared as investors sought a safe haven for their money. Investing in gold and silver is not just about buying bars or coins. You can also invest in mining companies or exchange-traded funds, ETFs, that track the price of these metals. It's about diversifying your portfolio. As the saying goes, don't put all your eggs in one basket. Here's a compelling statistic. In the last 20 years, gold has increased in value by over 500%. That's a testament to its enduring appeal as a store of wealth. So let's consider adding some sparkle to our investment strategy with gold and silver. They're not just shiny objects, they're smart investments for tough times. Chapter 4. Offer solutions to recession-related problems. Step number 4 is all about turning challenges into opportunities. The $100 Startup by Chris Gilbo shows us that recession times are ripe for solving problems. Did you know that many successful businesses started during economic downturns? It's true. Companies like Airbnb and Uber were born out of necessity during tough times. Gilbo says, "Value is created when a person makes something useful and shares it with the world." So, let's think about what people need during a recession. Maybe it's budget-friendly services or ways to save money. Offering solutions to these problems can be our golden ticket. For example, during the 2008 recession, there was a boom in thrift stores and repair services. People wanted to save money, so businesses that helped them do so thrived. It's about being observant and innovative. As the book suggests, start by looking for what people need. And here's an encouraging fact. A study showed that over 50% of Fortune 500 companies started during a recession or bear market. This means tough times can breed tough entrepreneurs. Let's be one of them and find those recession-proof business ideas. Chapter 5. Learn about blockchain and cryptocurrencies. Now, we're stepping into the future with blockchain and cryptocurrencies. The Age of Cryptocurrency by Paul Vigna and Michael J. Casey unravels the complex world of digital money. Cryptocurrencies like Bitcoin have been making headlines, but they're more than just digital cash. Vigna and Casey explain, cryptocurrency represents the first major redesign of money in about a millennium. That's huge. It's a whole new way of thinking about and using money. And in times of economic uncertainty, cryptocurrencies can offer an alternative to traditional banking systems. During the 2008 financial crisis, faith in traditional banks wavered, and Bitcoin emerged as a response. It's a decentralized currency, meaning it's not controlled by any government or institution. It's like having a bank in your pocket without the bank. Interesting fact. In 2010, someone bought 2 pizzas for 10,000 Bitcoins. Today, those Bitcoins would be worth millions of dollars. This shows the explosive growth potential of cryptocurrencies. So let's explore this digital gold rush and see how we can benefit from the crypto wave. Chapter 6. Invest in personal development. The 7 Habits of Highly Effective People by Stephen R. Covey teaches us that personal development is key to success. Covey says, the most important investment we can make is in our own personal development and growth. In a recession, skills and knowledge can be more valuable than money. Learning new skills or improving existing ones can open doors to new opportunities. It's like sharpening your tools before a big job. The sharper your skills, the better you can navigate through tough times. Did you know that many successful people dedicate at least an hour a day to learning or self-improvement? This habit can keep you ahead of the curve. Whether it's reading books, taking online courses, or attending workshops, there are endless ways to invest in yourself. Covey emphasizes, personal development is a proactive approach to increasing your options. In uncertain times, having more options can be your safety net. Let's commit to learning and growing every day. After all, the best investment you can make is in yourself. But before we continue, if you're serious about building wealth, hit subscribe and get regular updates. Let's navigate the financial world together. Chapter 7. Cut Unnecessary Expenses. The Total Money Makeover by Dave Ramsey teaches us that smart spending is key to building wealth. Ramsey says, a budget is telling your money where to go instead of wondering where it went. This means being in control of our spending. In a recession, cutting back on non-essential expenses can make a huge difference. It's like trimming the fat off your budget to stay financially healthy. Did you know that on average, people can reduce their monthly expenses by 20% just by being more mindful of their spending? One strategy is the envelope system, where you allocate a set amount of cash for different expenses. Once it's gone, it's gone. This physical limit prevents overspending. It's a simple but powerful way to manage your money. Another fact to consider: impulse buys often account for a significant portion of unnecessary spending. By avoiding these spur-of-the-moment purchases, we can save a substantial amount of money. So let's start cutting those unnecessary expenses and make our money work for us. Chapter 8. Refinance Debt. The Total Money Makeover also offers insights on refinancing debt. Ramsey points out, debt is a thief. It robs you of your future. Refinancing high-interest debt can be a lifesaver in tough economic times. Refinancing means replacing an existing debt with a new one, typically with better terms. It's like renegotiating the terms of a loan to make it more manageable. For instance, refinancing a mortgage at a lower interest rate can save thousands over the life of the loan. Here's an interesting statistic. Refinancing can reduce monthly payments by 10–20%, depending on the type of debt and the new terms. This reduction can provide much-needed breathing room in a tight budget. Remember, the goal is to pay off debt faster and with less interest. So let's look at our debts and see where refinancing could help. It's about being proactive and finding ways to ease our financial burdens. After all, every dollar saved in interest is a dollar we can put towards our financial freedom. Chapter 9. Build an emergency fund. Again, the Total Money Makeover gives you valuable advice. Ramsey explains, an emergency fund is insurance against life's unexpected events. It's our financial safety net. In a recession, having an emergency fund is even more crucial. Unexpected events like job loss or medical emergencies can happen. An emergency fund helps us handle these without going into debt. It's like having a life raft in stormy financial waters. A surprising fact: most financial experts recommend having 3 to 6 months of living expenses saved in an emergency fund. This might seem like a lot, but it's achievable with consistent saving. Even small amounts add up over time. Building an emergency fund starts with setting a monthly savings goal. It could be as little as $50 or $100. The key is consistency. Think of it as paying yourself first. By securing our financial foundations, we can weather any economic storm that comes our way. Chapter 10. Learn from historical market trends. A Random Walk Down Wall Street by Burton Malkiel teaches us that history can be a great teacher, especially in finance. Malkiel suggests, the market is a pendulum that forever swings between unsustainable optimism and unjustified pessimism. Understanding historical trends helps us predict future market behavior. During recessions, markets follow patterns. For instance, after most recessions, stock markets have historically rebounded strongly. Knowing this can help us make informed investment decisions. It's like reading the weather forecast before planning a picnic. Here's an intriguing fact. Studies show that investors who stay the course during market downturns typically see better returns than those who try to time the market. This approach requires patience and a long-term view. Think of it as planting a tree and waiting for it to grow. So, let's delve into market history. By understanding the cycles of boom and bust, we can better prepare for the future. Remember, those who don't learn from history are doomed to repeat it. Let's be the ones who learn and prosper. Chapter 11. Negotiate for better prices and rates. I Will Teach You to Be Rich by Ramit Sethi shows us that negotiating isn't just for business deals, it's for everyday life too. Sethi advises, spend extravagantly on the things you love and cut costs mercilessly on the things you don't. Part of this is learning to negotiate better prices and rates. Whether it's with your cable company, credit card provider, or even at a garage sale, there's often room to negotiate. Did you know that a simple phone call to your credit card company asking for a lower interest rate can save you hundreds over time? It's about taking the initiative. Negotiation isn't just about getting a lower price, it's about creating value for both parties. It's like a dance where both partners need to move in sync. Surprisingly, many companies are willing to offer discounts or better rates if you just ask. So, let's start practicing our negotiation skills. Small wins can add up to big savings. Remember, the worst they can say is no. But if they say yes, you've just put more money back into your pocket. Chapter 12. Focus on value investing. And finally, the core of smart investing, value investing. The Essays of Warren Buffett offers timeless wisdom on this topic. Buffett says it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. This means looking for companies with strong fundamentals and a good track record. Value investing is about long-term growth. It's not about quick profits, but steady gains. During recessions, many investors panic and sell off stocks, often at low prices. This can be the perfect time for value investors to buy. An interesting piece of data. Over the long term, value investing has been shown to outperform other investment strategies. It requires research, patience, and discipline. Think of it as building a house brick by brick, ensuring a solid foundation. So, let's focus on finding those undervalued companies with strong potential. By investing wisely and patiently, we set ourselves up for financial success. Remember, in the words of Buffett, the stock market is designed to transfer money from the active to the patient. Thank you for watching this video. Loved what you learned today? Check out our other videos for more incredible tips on building your wealth and securing your financial future.